Good morning. Today's discussion will focus on risk-taking behavior. There is an old adage that says higher risk, higher return. Does it work for high information technological turbulence? Okay, let's take a look at our discussion at the next slide. Our discussion based on my article that published in 2018 in the Journal of Risk Finance. The article titled Does Firm Performance Increase with Risk-Taking Behavior Under Information Technological Turbulence? The study aimed to explore the complicated relationship between risk-taking behavior and firm performance. Like we discussed before, that's whether high risk, high returns or not. However, the study will take a look from the point of view of information technological turbulence. In addition, the model pertains to mediating role of pricing capability because how risk can explain the performance. Then we try to identify the mediating elements such as pricing capability. It's appear that the risk government contribute to firm performance by combination of risk and returns. However, for decision maker, it's difficult to pursue the high risk strategy to achieve best performance, especially when under information turbulence. Many managers said that they're not ready to take a risk by allocating resources to social media. Risk-taking behavior, what is it? Risk-taking behavior is about willingness to seize opportunity under uncertain business environment. It's different from reckless. Reckless is about poor risk awareness. But risk-taking governance is a risk awareness and the decision to go through with the choice in R&D, cash holdings, and diversification strategy. And then we're going to take a look at the SME point of view. SME is associated with high risk business due to lack of access to resources. They have no resource, but they have to run business, and then they exploit resource from borrow, from selling something. So that's a high risk. We call that is high risk. And then the practice of risk governance is a very informal, but it's really proactive. From identifying a possible source of uncertainty, and then in estimating the potential impact of risk. And then the risk governance of SME represent the capability to deal with the business environment turbulence. Hypothesis one, this the major hypothesis. Risk has a positive impacts on performance. It means high risk, high returns. It's based on the conventional theory that risk-taking incentive will follow by high performance. By investing in their small firms, the entrepreneur expect to gain benefit of the investment decisions. It's associated with the self-interest assumptions that cost, return, and risk. Okay, for mediating ones, how risk can explain performance? If you take a risk and then performance, no, it's a risk. We notice that risk-taking behaviors arise from decision to establish the price. It sets a product and establish the price. And then regular price sensitivity of such product is lower in category is with a high premium price. And then we consider price as mediating variable. Technological turbulence. So we believe that comparison of risks and benefits is essential to understand the immature capability of SMEs to adopt IT technology. SME with intention to seize business opportunity will achieve high performance under predictable technological turbulence, while SME with a low risk technological arbitrage opportunity will imitable technological complexity. So it's mean under high technological turbulence, the impact of risk-taking behavior will be different. This study will use partially square because this study attempt to explore the research question with a weak theoretical basis. So this is the measures. 2 item for risk, 5 item for information technology turbulence, 7 item for performance. Okay, this is path analysis. Our path analysis show that the outer loadings is quite high. It's greater than 0.75. Hence, the R square also 0.573. And then what about the significance level? From the bootstrappings, we notice that all coefficients has a p-value. It's with this statistics higher than 8. It means the original sample or sample means much higher than standard deviation. So it's implies on high this statistic, which indicate that the p-value is close to 0% or 1%, and then we call those paths have a significant impact. What happened with the risk under information technological turbulence? The red ones is for a company with information under information technological turbulence at -1. It's indicated risk-taking behavior and for performance has a positive impact. For those who argue that IT turbulence is positive or high, the impacts tend to be flat in comparison for those with consider that IT turbulence is quite weak. Then we can say that for firm with high technological turbulence, if they become if they adopt risk-taking behavior, they will gain slightly high benefit than those who feel that information technological turbulence is very weak or low information technological turbulence. Okay, let's take a look at the managerial implications. The firm are encouraged to establish risk government orientation to be more viable and sustainable for future. All the level of information technological turbulence will have positive impact, but all have a different level. Only those who have capability to manage to follow the technological change. It means the technological turbulence is not quite high. They will gain more benefits than those who do not have capability to deal with the technological turbulence. The study extends the traditional view that the high risk have a potential to offer higher returns. This study now also to support the previous literature, but also indicate that high information turbulence reduces the effectiveness of risk-taking behavior on firm performance. Okay, let's discuss the article at the ULS. Thank you.